you're buying it on cash, the opportunity cost remains the same for the same property. So your question would be, why should you worry about investing to buy a property? There are multiple reasons. It's buying a property is not just maths. Property has, as I said, and there is a lot of sentimental value. There is a lot of value in the ownership of the property. There are a lot of fundamentals that go into purchase decisions, including your professional, including your profession, including your family preference, including the location, including the growth that you are experiencing or the economy is experiencing. So if you have somehow accumulated that kind of cash in your bank, should you spend that amount on, and should you forego that amount and get a property, turn that amount, that money into property immediately? So as you see, there are a lot of risk factors. Once you buy a property, you are stuck, and then you will have to consider all the risk factors of that property in the future. So the best thing to do, if you have the cash and you are considering buying a property with that cash, you can hold on to that cash and consider a home loan, just like the smartest friend in the group, who took a loan only for 10 years instead of 20 years. And in 10 years, you will end up paying about 72 lakh rupees after all the fluctuations, or maybe 75 lakh rupees at max. But in 10 years, your 45 lakhs that you retained in your investments can become 1 crore or more with mutual funds. You can invest in mutual funds. You can have with 45 lakhs. If, I think PMS services are demand 50 lakh rupees corpus. But if you have 45 lakhs invest in mutual funds, you will still get good amount of money in 10 years. 10 years is a pretty good time. You can invest at a high risk equity mutual funds and let your money grow while you also purchase the property, start living in it, and your opportunity cost will be, because you are foregoing the rent. If you are living in the property, you are foregoing the rent. You are not paying rent anymore, so you are retaining the rent and you are paying EMIs. Your net opportunity cost is about 1.7 crores instead of 3 crores. But if your loan is 10 years, you're only paying 71 lakh rupees. And even if you don't account for rent payments and everything, you still have a surplus of 29 lakhs in 10 years. But if you had spent this cash and you said, okay, I will pay the entire amount in cash, and entire 60 lakhs in cash, you will not have this cash surplus. So once you have accumulated the amount, enough amount to buy your dream property, you should not spend it or right away convert that amount into real estate. You still have, because there are a lot of risks in the future. It's a long-term transaction. The property can stay with you for lifetime, or you may get bored with it and give up within 5 years and you have to sell it off. So what happens if you